Thanks for joining us today, guys. Today we are joined by Jon Ostenson, and we're excited for him to share a little bit about his background in the franchise world. And so, without further ado, Jon, you mind introducing yourself to the audience?
Yeah, absolutely. Jon Ostenson, based here in Atlanta, Georgia, and absolutely love what I do. I get to introduce those that are looking to invest and diversify their holdings, current business owners, as well as those looking to leave the corporate world, and get to introduce them to a world of opportunities and what I call non-food franchising. So a little bit of background on me. Spent most of my career in the corporate world, really moved into franchising about 6 years ago as the president of Shelf Genie franchise system. So had the opportunity to sit on that side of the table, supporting all of our franchisees across North America. For me, it was really an eye-opening experience. And so long story short, partnered with the founder, and we've invested in franchises ourselves now as franchisees. And I've had other partners we've invested in franchises too. So kind of seen both sides of it, and and where I spend most of my time, because we have good people running our franchises for us, allows me to spend my time working with others, helping them to understand this world of opportunities that many are attracted to once they learn about it. So look forward to kind of digging into that with you now.
Yeah, excellent. Did you, so you mentioned you were also a franchisee. Did you do that at the same time going through a Shelf Genie, or did that come after?
That came after.
Okay. Was there any bug or inkling while you were there to say like, hey, I want to be on the other side?
Once I woke up to the model of franchising, which, I'd always associated the F word franchise with fast food, which I think a lot of people do. And that's why our new book that's coming out in a couple of months is called Non-Food Franchising, because it does raise eyebrows and gets people questioning, what are those other industries that we can invest into? So no, during my time at Shelf Genie, I was trying to keep my head above water, supporting owners or children all across North America with the expectations of us trying to keep them happy and playing nice, and really setting them up for success. But for me, that was a very eye-opening experience to the power of business ownership through franchising, and the fact that you can step in with product market fit day one. That path to profitability is just all about the executing. You've got a coach on the sidelines, that franchisor. You've got other franchisees, that are sharing best practices, and also learn that you can make good money upon an exit. And I think you would find this interesting. You may know it already, but there have been some studies done to show not only is it a higher success rate, franchises 85% still in business after 5 years, but upon an exit, you get on average about a 1.5 multiple of a non-franchised like kind industry business. And so, a lot of people don't quite realize that until they look at the stats.
So when you were going through, right, and probably at Shelf Genie a little bit after, and you reached that point of profitability, right? Didn't have to worry about food on the table, roof over the head. What was your strategic framework of where you were investing, right? It sounds like, that bug to be a franchisee hadn't hit yet. And so kind of how were you thinking about that?
Yeah, absolutely. So, where I am now versus where I was then isn't too different. I'd say I've leaned more into that business ownership, the alternative investment world. My financial advisor, has me allocated across a diverse portfolio of public securities. But even I see them moving more and more into the alternative universe. And, being a member of the Entrepreneurs Organization and other groups, I get exposure to a lot of private opportunities. So I'd say that as you look over time at the evolution of, we've always done a little bit of real estate on the side. More recently, we've done a little bit of crypto. It's not looking great right now, but we're dollar cost averaging, continuing with that pattern. I haven't invested in baseball cards in many years, but no, I'd say, a lot of private lending, where it's collateral backed, whether it be real estate lending, I'm invested in a few different funds, or whether it be consumer based lending. And so we'll do a little bit of angel investing here and there, but that's never going to be a very large piece of my portfolio with non-franchised angels, just because the risk profile is a little too high.
What did you start with in terms of those investments as you were kind of getting going? And what did that path look like as you were kind of building your house of investments?
Yeah, so definitely started with the bedrock of the public securities, knowing there was a long-term horizon, and having a well-diversified S&P based type portfolio. I'd entered into business ownership with the baggage from the corporate world, which includes some golden handcuffs I had to break, but where I had some stock options and had exercised all those, and in the vesting, from the when I worked for a large public company. But so I'd say that was the bedrock, and I kind of got lucky in holding on to a couple of properties that we lived in and then rented out, and so became a real estate investor. I've never gone as deep there as some have, but most I've had a couple of pieces of raw land and a few real rental properties. But we've been very fortunate on our homes. My wife's an interior designer, and we've built homes that have appreciated very well over time, and that's created some non-taxable hard assets that we can then leverage up. And right now, a couple of the hacks that I am employing personally, obviously, we built our home and then I took out a mortgage after the fact at 3.25%, which now sounds like a deal. At the time I was hoping it would be lower. But portfolio loans are, the securities based lending is an area that I've really been leaning into. So if you have a brokerage account outside of your retirement accounts, be able to borrow against that. I stay fairly conservative, only borrow up to 50%, but right now it's at a 1.5% interest rate that will go up over time. But if I can take that and then flip it into real estate lending, that's relatively safe, collateral backed at 12%. That's the definition of arbitrage right there. So that's one of my latest little hacks that I stumbled upon.
Nice. And when did kind of the investing in franchisees come for you?
It really came after my experience at Shelf Genie. So long story short, ended up partnering with the founder. We spun off. We actually built a business to a couple of million that I was running. That was marketing agency and a call center kind of combined. We make the phones ring, and then we answer them for franchisees. And so we started offering that to different franchise systems. We did this for about a year and a half. We had a lot of growth, got up to about 40 employees, but it wasn't really profitable. Everybody liked the idea, but they weren't willing to pay for the customization behind it. And so lesson learned to me, again, there wasn't product market fit from a profitability standpoint. I learned the hard way. And so ultimately had to pull the plug and wind it down. So didn't have a big sexy exit. Fortunately, didn't lose much money, but a lot of lessons learned that I took with me and said, hey, in my next business ownership ventures, I want a proven model. And that's kind of where, fell back into franchising.
And how did you talked a little bit about the multiple and the non-food side, but how did you fall, squarely in the non-food franchise versus the food franchise? And, how'd you get there?
Yeah. So my background isn't in food. And what I've since found is 95% of my clients don't want anything to do with food. And I'm very thankful for the 5% that do. And God bless them. We need those establishments. But my belief, it really at the basic level is, there are easier ways to make money, that require less capital output in the beginning, maybe a little less risk, a little less trendy from a preference or light standpoint or brand standpoint. Now, I think Jimmy John's, Subway, there are ones out there that are household names, but you also have a lot of food upstarts that I think it's going to be a tough road for them because you're deploying the capital. You've got a large team of hourly employees. You may be open 24/7 or something, somewhere close to that. For me, that's just not my thing. And what I found is most of my clients like these other industries where we play. It's home and property services. It's been a huge hit the last couple of years. All the niches within that $600 billion market, home, health and wellness, fitness, automotive, anything related to kids, pets, the aging population. People are always going to spend money on their health, their homes, their kids, their pets. And then there are a lot of just hybrid models. I mean, non-sexy is the new sexy when it comes to business ownership. I've got clients buying into, we just had a Wall Street attorney outside of Boston buying a gutter business, no background in that space. I've had clients buy roll-off dumpsters, different businesses in the waste management space. That's where the interest is right now. It's those non-sexy industries, insulation or drug testing, B2B drug testing for companies that, has some unique about the business. So a lot of proprietary elements in these different types of businesses. And that's where we see people most interested. So that's kind of a long-winded answer to your question, why focus outside of food?
How do you see that model competing with the search fund model? Is there a direct correlation, or is it, search fund mostly buying non-franchise business where, your client's looking at a franchise play?
Yeah, great question. And, a couple of thoughts there. We do get private equity firms reaching out to us every few days saying, hey, John, what are you seeing in the market from a franchise standpoint? because they're scooping up franchisors right and left. They love the franchise model for all the same reasons that we do. And so you see a lot of activity. Every now and then they'll come at the franchisee level and scoop them up. So what you do see a lot of, a little context, in the US alone, you have about 4,000 franchise brands. You take out the food and lodging, we don't really work with hotels either. You take those out, that's probably about half of the brands. The other half consists largely of a lot of emerging franchisors that will go from 5 locations to 250 in an 18-month period. I mean, I've got case study after case study where that's happened. So that's where you see the growth right now. And so a lot of times, outside of franchising, they'll come in, they'll purchase a company, love the model, and then franchise it as a way to scale it. So we do see a lot of activity on that front. So there's a little bit of overlap there. I work with a lot of clients that have been looking at resales, that have been looking for deals out there. And once you pull back the covers, most of those deals aren't as attractive as they initially seem. They say, wait a minute, I'd rather not pay a multiple, step into a franchise, be able to put my thumbprints on it. And, and like we talked about, I mean, a lot of your listeners would go with the model of what we call executive or semi-absentee, where you're putting a general manager in to run the day-to-day operations and maybe coaching them from the sidelines. It's a comfort to them to know they're not the only ones looking out for that general manager. You also have the franchisor and their support team, supporting that individual as well.
Yeah. So what is that thought process like, right? You mentioned that an attorney is buying a business he's got no knowledge of. Like, how is he able to effectively run that and, be profitable? How involved does he need to be?
Yeah. So the one that he purchased, all in investment was probably around 200,000. They're averaging 1.8 million per location across the nation, and at 30% EBITDA or bottom line margin. So call it 500 and change. In his case, he's going to start out, get his hands dirty, build up the business, and then turn it over to a general manager. I've got many clients that day one will, hire someone to run the business for them. I'm invested in a driveway franchise, the driveway company, great little business. I've got a 27-year-old former CPA running that for me, and he's killing it, absolutely growing the heck out of that thing. And so again, that semi-absentee model is very effective, and it's very, very common. At least half my clients don't want to run the day-to-day operations. But the thought pattern there is come in with an eyes wide open mentality. A lot of my clients are industry agnostic. They say, hey, give me the opportunities with the highest ROI, maybe the fewest number of employees, or, here's some things I've always liked or not liked. And we kind of dig into that. But the idea is, to stay open-minded, because close to 90% of our clients end up in an opportunity in an industry they hadn't previously considered. So once they put that business owner hat on, it's just a whole new framework and lens through which they look at it.
Are most of the franchises that you work with essentially service-based, I would imagine?
Quite a few are, and I'd say coming out of COVID, there's been a little more of a desire to move away from some of the customer facing retail storefronts. Granted, some of those could still be classified as services businesses, but we've had a lot of people say, hey, I'd rather have something that's remote work. Some prefer B2B, some prefer B2C. But a lot of service-based businesses, we do have some that are productized as well, but I'd say service-based is definitely where most people have been leaning, because they want to be Amazon resistant. They don't want something that could potentially be sold on Amazon. And
right.
A lot of these businesses have a product component to it, but it's not the core of the business.
So how do you prevent someone from, lifting essentially what the model looks like of the franchise and creating their own competitor, in the same area, same space, et cetera?
Yeah. Most of these businesses aren't immune from competition. I'd say some of the things they have going for it, oftentimes it's bringing a white collar approach to a blue collar industry. And so you're able to come in there day one with your marketing. And, in some cases you do have proprietary elements, not just to the training, but to what you're actually offering to the customer. And we have a few businesses that are actually patented, that have IP to that degree beyond the trademarks. But it's coming in. I mean, think about service providers, just as an example. Wouldn't it be nice if you had a call center supporting you on the back end that's sitting there all day ready to answer the phone and with your branding? And, we all know what our experiences are out there in the market. if you're going out there with an iPad making quotes, for a job versus, a guy that won't even call you back and maybe shows up in a pickup truck, without any branding or anything. It's just, I think coming out of COVID, there's a trust thing as well, that people trust brands. They trust those that have a national presence, that have been somewhat vetted and trained. I think there's a strong leaning in that direction. So, but again, a lot of these businesses are not totally immune, but the ones that I work with for my clients and we really focus on are those that do have either some barriers to entry or just kind of a unique niche in which they operate. Now, I mentioned the insulation. That's a business where they do produce their own proprietary product, and they're all the nerd out talking points as to why it's better than everyone else's. We've seen Harvard MBAs buying an insulation business. They love the financials behind it once they put their business owner hat on.
What's the most exciting kind of business opportunity that you're seeing today?
Yeah, gosh, I mean, that's a loaded question. I get excited about a lot of these. I mean, I can just give a few examples. I just had a client, mid-40s, pharmacist. He started up FedEx routing business on the side a couple of years back, built up 25 trucks. He came to us and said, "Hey, let's look at property services franchises. I want to diversify my portfolio." We looked at a lot of them together. He ended up buying one that was a one-stop garage renovation business. We just had a client who was up in upstate New York. We just had a client. She's a PhD with the University of Arkansas. She came and said, "Hey, I want to keep my day job, but I want to get something going on the side." With her, we introduced her to a fitness concept that's a small box, caters to those 55 and above, who are largely uncatered to in the fitness world, that don't like the big box gym. Incredible technology through the business. And she's off to the races.
Slow Zone?
I'm sorry?
Slow Zone?
No, the exercise coach.
Okay.
Yeah, only large national one, with any sort of presence that caters to that size. I think of a client of mine, Nathan Bocock. Nathan is the largest franchisee of 2 Men in a Truck moving service. Operates in about 10 markets, $30 million a year business. And he came to us a few years ago and said, "Hey, I want to get into something totally unrelated to what we're doing now." So we introduced him to a home services brand. He has come back, put a young GM in place. He's come back, bought additional locations since then. Same thing. We got him into a waste management type company. Again, he never went on a job site, never touched the business, but it's just cash flowing for him with some coaching on the sidelines. And so it comes down to having a good person. I mean, you can have a great system, you still have to have a good operator. And so I'd say that's where the rubber meets the road of, finding someone that you can trust to run that day to day, setting up the incentives and the alignment, so that you can play the role that you want to play without having to get too involved.
Do you work on the opposite direction as well, right? So say we've got a listener who's got a home renovation business or a moving business, and they're in one city, they're doing well, they've got established systems, marketing, and they want to franchise that out elsewhere. Is that an opportunity for people?
100%, 100%. And, I have those conversations on a regular basis. We don't personally take companies through the franchising process, but I am always happy to have those conversations and share, "Hey, here's how I see the pros and cons stacking up, and whether your business is franchisable and whether it makes sense, and what you may need to do to get it ready." And I've got a great partner that does help us take companies through the process and does a really nice job. So, we just had a multi-unit chiropractic clinic that we help go through the franchising process. We just had a flooring company that we helped through that. We've got a yoga studio right now we're working with that's going through the franchising process. So, no, I think a lot of companies are realizing there are multiple ways to scale, but if I could use other people's money with someone that has skin in the games, they're an actual owner, not just acting like an owner. They know their local market. And I get in all the financials around why it could make sense. And it's not right for every business, but for a lot of businesses, it does make sense. And again, you're working towards an exit down the road that you'll likely get a higher value to on the franchisor side as well. Just given the appetite in the market from private equity firms.
As we're nearing the end of time here, Jon, what if you wanted to leave one thing with the audience in terms of how they're thinking about, where to invest next, or what to, considerations, or, where to go, what would you recommend for them?
Yeah, no, I think start thinking about areas of interest or areas of market need around you. And if you are a current business owner, we just had a real estate broker, that we introduced to a property management franchise. He was looking to bolt on something complementary to his core business. In some cases, it's totally diversifying. So there are different strategies, and we certainly have case studies that we can share with people. But no, as far as the next step, I'd say come out to our website, frambridgeconsulting.com, which I'm sure will be in the show notes. Sign up for our newsletter. We try to put out great content every month. And, if you sign up for the newsletter, for all of your listeners, we'll also send you a copy of our book called Non-Food Franchising, which comes out in about 2 to 3 months. So really excited about that. But follow us on LinkedIn as well. We share a lot of content out there, and more than happy to connect. Entirely no cost to work with us. We're funded by the franchise brand. So, and none of that gets passed on in any way to our clients. So a great model, and we'd love to connect.
That's awesome. Makes it easy for you, right? Just
right.
Go add value. So
Absolutely.
That's awesome. Appreciate your time today, Jon, and all your insights.
Enjoyed it. Thanks for having me.